Hey, Steve Saretsky here. As always, this is the Canadian real estate market update where basically every Friday I'm going to recap you the news, provide you the know what you need to know, what you need to focus on. If you get any value, if you enjoy these videos, hit the subscribe button, share it with your friends. Obviously, I really appreciate the support. If you have any comments, put those below. I'll answer those. We'll have a good discussion back and forth. A couple of things I want to hit on, and we'll basically do some housekeeping at the end. First off, the foreign ownership numbers came out. Primarily the ones I want to look at are Vancouver and Toronto. And secondly, RBC came out with their affordability index, which they release every quarter, basically tracking affordability in Canada's real estate markets. Those are the two things that I really want to focus on today. Going to put those all together. So first off, those foreign ownership numbers that came out is collected from Stats Canada. It was an accurate data collection. Obviously, there's going to be some flaws to it in the way that the metrics that they're looking at, but the way they collected it is they basically went through land titles, land registry, and looked at who's owning the homes. And this is part of the new stats package rollout, where they basically allocated a lot more money and resources to actually collecting data. And so this is the first time they've collected it, so we don't have a historic look at previous data. So there's not a whole lot that you can pull from it, but I tend not to focus too much on this foreign ownership subject because it ends up turning into a very heated debate. I prefer to focus on the financial standpoint. I prefer to look at financial markets and look at Canadian and Vancouver real estate from a global macro perspective, as opposed to get out your pitchforks and start protesting. And that's generally what happens as usually we end to start talking about foreign buyers in the market. But nonetheless, the official statistics, first off, a foreign owner is quantified as someone that your primary residence is not here in say Vancouver, which can be flawed. So either you can live in China and you can have a house here, so that would be a foreign ownership, or you could be a Canadian citizen, you could be born here, but you could be working full-time in the States but still technically own a home here. That would be considered a foreign ownership owned home. But basically the numbers in Vancouver, if you combine all the market segments, condos, single-family homes, etc., it was 7.6%, with the highest portion of that segment in the condo market. So 10% of condos in the city of Vancouver are foreign owned. And I think single family houses around 4%, 5%, which to me seems questionably low. But again, I think the way that they've collected the data is accurate. The only issue that I have is, obviously it doesn't track blind trusts. That is a factor in the market, but it's not a very large factor. But the big overwhelming data point here, and this is what people are really arguing, and this is not something I necessarily want to get into, but it's that ultimately it's where is the money coming from, the foreign capital argument. Basically what's happening is, and this is the most common scenario that I see again, is typically these foreign owners, quote unquote, they actually already have Canadian passports and they are residents here. And what happens is mom and the daughter usually have a house here, and dad works overseas and funnels the money. So there's no income tax actually declared here. They're paying their property taxes, but that people feel that isn't sufficient. It puts them at a disadvantage because obviously someone here is paying very high income taxes, and someone is basically earning their money offshore, paying less taxes, whatever, and then coming here and not contributing their fair share. And I get that, and I think that's a very valid argument. I think that becomes really an issue about tax laws. It's you're basically asking to rewrite tax law. It's a huge focus on immigration policy. Canada has a huge importance on immigration. And you can't. So, and when people say, "Oh, let's just ban foreign ownership," it's not so simple when your whole economy is predicated on immigration. And Trudeau has recently upped those numbers, because ultimately, if we didn't import immigration, we would actually have a declining population, which of course leads you into a nasty debt deflationary environment. and that's really not somewhere you want to be. So there's always moving pieces, but do I think that people earning an income elsewhere should be contributing more than just their property or property taxes every year? Particularly when Vancouver has some of the lowest property taxes in the world, and in Canada, Vancouver has the lowest property taxes. So yes, I think they should be, but the official numbers again is 7.6% in Vancouver. But one thing I quickly want to touch on, and just for people that are from Toronto that are watching this, I think the numbers were 5% in Toronto. And so, developers were coming out and saying this is a huge win. We told you it was only 5% of the market, da 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 da. And then, of course, once you start peeling back the numbers, for newly completed housing in 2016 and 2017. So if a house was recently constructed in 2016 and 2017, 20% of that product is foreign owned. And this has been that huge thing that I've been constantly pushing, is that watch this pre-sale market. It's heavily being marketed overseas in Hong Kong. It's heavily marketed abroad. The prices here locally just do not make any sense. As I said, any project at downtown now starts at minimum $1,700 a square foot. It's now getting up to closer to $2,000 a square foot. That's just simply, those numbers are simply not numbers that are attainable by a local unless they have just an obscene amount of leverage. And so that's the market. Again, I can see the number of assignments that are happening in this market, looking at the people that are on title. As I said, this is a market that is hugely predicated on foreigners supporting that pre-sale market. It's a market that, if you're planning to assign and flip, which we're seeing about 15 to 20% of the buildings now being flipped prior to completion, that is not subject to a foreign buyer's tax as well. So if you're looking to speculate on the Vancouver real estate market, pre-sale condos is probably the best way to do it. I think it's at this point in the game, I think it's a very risky move, for various number of reasons, which I've talked about in the past. But that is, again, 20%, 2 of every 10 basically pre-sale condos that were recently completed are foreign owned. Again, that number is probably higher when you factor in assignments, because those don't register in land titles, so those aren't tracked in those metrics. So yeah, I think that whole sector, and I've heard of buildings, being marketed locally in Richmond, basically for optics, and in areas in Vancouver, they're basically marketing them locally for optics, but they're actually already pre-sold, and there's really not anything left for the public. So I think it is a huge, and this is why you're seeing people now crack down. All of a sudden, Mayor of Vancouver is saying we're having a locals only program for condo pre-sale marketing. Again, this has been going on for a while now. So that's where we're at. And then now switching gears into, again, just to quickly touch on that, and this is just sort of brings home the point, right? Where everyone has now begun speculating on land prices going up and up and up. The white spot in prime downtown Vancouver area recently sold for $245 million. Speaking with some developers today, basically the project is a break even based on what they've been pre-approved for, density-wise. The project is a pre-approval. It's a break even at $2,000 a square foot in downtown Vancouver. So this developer has to basically hope that the market continues to rise to be able to meet that in order for them to actually make any money on this project. And that's the position that developers are in, basically, is unless you're like a big time developer right now, you are basically taking on a lot of risk. You are basically buying in today at a loss with the expectation and the hopes that land values and the real estate market and prices continue to rise in order to support these projects, these developments that are getting built. And that is firsthand from developers that I've personally sat down with, as well as discussions on Twitter with them. So anyways, to me, I have to say good for the guy that, has the balls to do that. But, obviously there's a lot of risk involved there. Anyways, moving on to the RBC, Canadian housing as a whole hit a 27-year low for affordability. So in other words, it's the housing has not been this unaffordable in 27 years. That's per RBC's most recent Q3 2017 report. Vancouver recently set a new record for the most. This is the highest the metric's ever been. Of course, the last time it was this high 27 years ago, it was 1990, shortly after prices rolled over. This is basically a case in point where you can't have housing affordability that you can't have housing that unaffordable for that long. Yes, price boom is ultimately it's sort of an initial jolt. It's initially very beneficial for the economy. It gives it that sudden surge. Everybody's feeling good, wealthy. You're pumping money into renovations, record number of construction. The GDP and economic numbers look good, but eventually it's a hangover. You can't have consumers spending that much on housing. It starts to drag on consumer spending, and ultimately leads to recessionary impacts, where basically consumer spending just drops and it's not sustainable. So that's what we saw in 1990. House prices basically fell, consumer spending fell, and we're basically in a recession. So that's not to say a recession is immediately on the horizon, but this is something I've talked about. Like, you can't just bring house prices up to some stratospheric level. You can't just bring debt up to some stratospheric level and expect it to hold and expect not to have any sort of really negative repercussions. So that's all I've got. If you have any questions or comments on that, again, put those below. A couple quick housekeeping items. If you haven't read my post on home equity lines of credit, basically spurring the private lending space, happy to say that was actually shared and written up on Zero Hedge the other day. So if you're watching these videos and you haven't heard of Zero Hedge, you should probably check them out. Quite honored to be on there. Obviously appreciate all your support. It's brought me some more awareness and eyeballs and attention. So yeah, you can go check that out. That's on Zero Hedge, or obviously still on my website. And coming up next month, I'll actually be recording it next week. If you don't know who Jared Dillian is, he is with Malden Economics. He was with Lehman from 2000 to 2008. I'll be joining his podcast, speaking on Canadian housing and sort of my thoughts on it. He is a guy that is bearish on the Canadian real estate. Obviously, he lived through the States and being at Lehman in 2008. This is a very well-respected investor, currently now with Malden. He's got a pretty big following there on Twitter. He's the author of the Daily Dirt Nap, very popular financial newsletter. So yeah, very excited to be joining his podcast. I think it's the Monthly Dirtcast is the podcast, but I will link it up once it's live. We're going to record next week, and I think it's going to be posted for January. But in his last interview, he's doing a 2-part thing on Canadian housing. I think he interviewed Seth Daniels, who's of JDK Capital, who's targeting Canadian real estate, basically trying to short it. That obviously that fund has not been doing very well, but Seth has some very interesting points on Canadian real estate. So I'm quite honored to be again in that space and to be asked to come on these shows. Always happy to do that. That's pretty much it. I just want to thank you obviously for your support. I'm gonna have some more reports coming out here around the end of 2017. As we head into 2018, I basically want to provide you not necessarily like a forecast, but maybe some of my thoughts as we head into 2018. Some things to really watch for. I'm going to put a year-to-date, a year-over-year compilation of statistics. So what I'm going to do is I'm going to try to grab the whole year's stats for Vancouver. I'll bring you your total year-to-date dollar volume amount spent on Vancouver real estate for all of 2017. We'll be able to compare to all of 2016, 2015, 2014. as well as sales, the average price for the entire year. I'm going to try to put all that data together for you with my stats guy. We're going to meet up this weekend and start working on those reports for you guys. And so pay attention to those. That'll probably be followed up with a video as well. If you have any suggestions for things that you want to watch or data that you would find useful, that you think that maybe I should calculate or include in any of these reports or videos, please let me know. Yeah, that's pretty much it. Merry Christmas. Happy New... I think I'm actually going to be doing one more video here before the new year. So, Merry Christmas. Appreciate your support. And I'll see you next Friday.